Take a look at this chart of the VIX futures. Remember, this index is based off option prices, and options expire every month. So you can bet on an April volatility or May volatility or June volatility with the futures. Unfortunately, the VIX futures have started to move into what's known as a state of backwardation. In other words, the current volatility index is trading at a premium to the February VIX futures, and the February futures are starting to move above the March futures. According to Sebastian, when the VIX futures go into backwardation, it's a sign of the market becoming irrational. It's often a turning point for the stock market. It can mean we're about to reach a significant bottom and that the averages can turn around, something that the oversold condition would indicate, but it can also mark the beginning of a hideous breakdown. Sebastian points out that the VIX futures went into backwardation in March of 2020 and stayed that way for weeks. Same thing happened in October of 2018. Federal Reserve crushed the stock market with a series of aggressive rate hikes, and Jay Powell talked about the need to overshoot in order to stamp out inflation. In short, pretty much every time the market sells off dramatically, Sebastian says the VIX futures tend to go into backwardation about a third of the way through the devastation. Then the selling continues for a few more weeks. Unfortunately, that's where he thinks we are right now, because we're not dealing with a VIX spike, we're dealing with a VIX swell, and those always last longer than you'd like. The bottom line, the charts as interpreted by Mark Sebastian suggests that the S&P 500 can remain the house of pain through early February. Now, I wouldn't be surprised if he's right, but as the market gets hit, you need to hold your nose and use this weakness to buy the stocks of quality companies that make real products, or provide real services, and generate real profits, like we started to do today for the Charitable Trust, as you saw, if you remember the club and watched our morning meeting show. Everything else, ice it.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.